Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, October 29th, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the developer and president of Simple Market Signals at simplemarketsignals.com. Simple Market Signals is a proprietary trend direction and risk management model. We will come back to this chart in just a couple of minutes, but I want to start off with a weekly candlestick chart of the S&P 500 to get a big picture view of what has happened for the week, and also look at the last year, and then we'll move on to the shorter time frames as we work through our charts. This chart starts back in September of 2020, and of course each candlestick on this chart does represent 1 week of trading. We have a few simple moving averages here. The green line is the 10-week, the orange line is the 20-week, the blue line here is the 40-week moving average. And over in the upper right where my cursor is moving, you can see that is this week's trading. We were up 1.33% this week on the S&P 500 and closed at 4605.38, 4605.38, and that is another new all-time weekly closing high for the S&P 500. Now, we know that 5 weeks ago we had one candle here that closed just barely below the 20-week moving average, and the last time that happened was about a year ago. Okay, so we had, just recently again, we had, a few weeks where we had some trading below the 20-week moving average. We had this candle right here that closed barely below the 20-week moving average. But of course, over the last 4 weeks, we've recovered everything we lost and moved into new all-time highs. But the last time we had any trading below the 20-week moving average was a year ago, back in October and the first part of November of 2020. So it shows you just how strong this stock market has been. And so, guys, as the old-timers say, let the trend be your friend and don't fight the trend. The next chart that we're going to look at is a daily candlestick chart of the S&P 500. Now, this chart just focuses on the last 3 months. I do want to point out that in addition to the new all-time weekly closing high, we have a new all-time daily closing high also as of this week, and that happened on Friday the 29th, and you can see that, that is the only candle, by the way, that has ever closed below above 4,600 on the S&P 500. So we had our very first daily and, of course, weekly close above 4,600 on the S&P 500 this week. And one of the things I want to point out is this 4430 line. Now, if you guys have been watching my videos, you know that I've been pointing out how important this line is. If you haven't seen this, if you're new to the channel, just found me, make sure you go back over the last 4, 5, 6 weeks of videos, and because I do put out at least one video like this a week, generally on Fridays or over the weekend, depending on my time frame and my schedule. But this 4430 line, and what I'm going to do here, I want to show you just how important this is. So I'm going to back this up a couple more months here, and because I want you to see the first time we ever traded up to 4430 was right here back in the latter part of July. Okay, and you can see this daily candle got up to this, and the wick of the candle kissed that 4430 line, but we couldn't get above it, right? And if you it took a few more days of trading, and here in August we finally got above. That was August 6th, I believe. We finally got above that 4430 line and traded above that for a few days, fell down below it, and then finally got above it. And you can see we've been dancing back and forth across this for months. And again, clear back here at the first part of October, again, you can see we came right up to that line, kissed it, and got rejected. Well, once we finally got through this with some decent volume here a few weeks ago, and we cleared the 4430 line, and you can see this green line. That's the 50-day moving average on this chart. Once we got above that, you can see that took us right up to these new highs. Okay, so this 4430 line has been super important for the latter part of July, August, September, October, and now of course we're entering into November. So this 4430 level has been super important, and the fact that we're now above it, we've had some really nice volume here over the last couple of weeks to the upside, strong volume days. All of that bodes well, I believe, for the next few months, and I think it's quite possible that we could continue to move into new highs. Now, look, I am not trying to predict the future. That is a fool's game. But when we look at the technicals, when we look at the strength of the volume, when we look at the fact that the market has cleared this area, which you can see, we had some congestion, right? Some consolidation right here. But the fact that we've cleared this and we're now above that, and we're above it, in moving into new all-time highs on a daily and weekly basis, and we'll take a look at the intraday here in just a minute. But guys, don't fight this. Okay, I would encourage you not to fight it. I know there's a lot of negativity out there, but just understand this is the stock market. We don't invest in the economy. We don't invest in politics. We don't invest in news headlines. Pay attention to the stock market, okay? And I'll have some more information for you on that towards the end of this video. But so stay with the entire video. But guys, please, anyway, just understand. Economy and stock market, not the same thing. News headlines, politics, none of that matters. Stay focused on the stock market. All right, so the next chart we're going to look at is an hourly candlestick chart of the S&P 500, and this goes back to the first part of October. And again, even on an hourly candlestick basis, you can see this 4430 level and how important this has been. We got right up to this on October 7th and just kissed that line and got rejected for a few days. And finally here on the 13th, we started to move up a little bit, but on the 14th of October, you can see this really strong volume on these hourly candles, right? It's this is what I call breaking the market down and looking at it under a microscope, so to speak. And even hourlies, 30-minute, 15-minute, whatever time frame. But in this case, we're looking at the hourlies, and you can see this really strong volume, and that's what finally got us above this 4430 level. But you can see a couple of candles, right? Right here on the 14th of October. Just some real trading right around that area. But once we finally cleared that area, you can see the market has just melted up, okay? And then here on Friday, the 29th of October, that very last hour of trading, and I'm going to show you even a shorter term chart here in just a second, so stay with this, but look at that, right? It was the last hour of trading on Friday the 29th where we hit our new intraday high, all-time intraday high for the S&P 500 at 4608.08. So 4608.08 is now the all-time intraday high for the S&P 500. And again, that happened during the last hour of trading on the 29th. So you talk about, ending October on a strong note, right? Ending the week of trading on a strong note. And keep in mind that November through April are generally the best 6 months of the year for the stock market. So we're going into what is seasonally, traditionally, the best 6 months of the year for the stock market. And we're heading into that best 6 months with, from a technical standpoint, some real strength behind us. And on this chart, this is a 1-minute chart of just Friday alone. And what I wanted to point out is we just looked at the fact that it was the last hour of trading on Friday the 29th. But check this out. I just think this is interesting, right? I'm a geek. What can I tell you? I love this stuff. But look at this, right? It was actually the second to the last minute. So this chart here is a minute-by-minute chart of all of the trading on Friday the 29th of October. And you can see here it was the second to the last minute of trading on Friday the 29th where we hit that new all-time intraday high of 4608.08, okay? So I just think this is kind of interesting, but it just shows you guys we didn't sell off during the last 15 to 30 minutes of trading. We ran into that last 30 minutes of trading very, very strong and got our new all-time intraday high just 2 minutes from the close of trading on Friday the 29th. Now let me give you a few things to think about. The stock market and the economy are not the same thing, okay? So please remember that. The stock market and the economy are not the same thing. We don't invest in the economy. You can't buy shares of the economy. You buy shares of publicly traded companies or indices like the S&P 500. Now, obviously, we can't invest directly in an index. We have to go through an ETF or a mutual fund to get exposure to the index, but you get the point, right? That's what we're truly investing in, right? Is publicly traded companies, either one at a time, individual stocks, or using an ETF or a mutual fund, we're getting exposure to a basket of stocks or an index like the S&P 500. So going forward, to have a chance of success as an investor, you will need to focus on stock market-driven data. Future investing success will require getting in sync and staying in sync with the stock market by using stock market-driven data. Let me repeat that. Future investing success will require getting in sync and staying in sync with the stock market by using stock market-driven data. Now let's talk about some of the benefits of approaching investing in this manner. If done properly, some of the benefits of investing in this way will be increased upside capture, decreased downside capture, improved risk-return profile, and the ability to sidestep major market downturns. So think about this, guys. What if you could increase your upside, decrease your downside, improve your risk-return profile, and have the ability to sidestep major market downturns? What could this do for you, right, on a go-forward basis? What could this mean in your life if you were able to do these things? Now let me share with you what subscribers are saying about Simple Market Signals. First, we are going to hear from KT from Michigan. I have been trading for many years. I did not realize that I have been trading in a completely blind fashion. SMS has given me the direction, literally, I've been desperately needing. This service allows you to clearly see what the market is doing. If you are remotely serious about trading or investing, you must try this service. Again, that's from KT from Michigan. KT, thank you. I appreciate that feedback. Next, we're going to hear from Rich A. from Ohio. Hi, Rodney. I want to thank you for creating Simple Market Signals and making it available to the average investor like myself. I work hard for the money that I invest, and I want to try to get the best return for my investment. Like a lot of people, though, I just don't have the time to watch the markets closely, and I've been blindsided a few times in the past by market moves I didn't see coming. Needless to say, if I could have avoided those downturns, I would be much further ahead financially. This is where Simple Market Signals comes in. It takes complex market data and distills it down into an easy-to-use tool that anyone can use to see where the markets have been and are likely to go. It is sort of like a barometer that a weather forecaster uses, only easier to use. I like the fact that I get weekly updates from Simple Market Signals and also get updates anytime there are important changes in the markets. Your emails are succinct and to the point, and the signals are easy to understand. Depending on how much time I have, I can quickly scan the main points that Simple Market Signals gives me or do a deeper dive and read about the various market sectors and their performance outlook. Either way, I get the timely and important information I need. Thank you again for doing this and keep up the good work. Again, that's from Rich A. from Ohio. Rich, thank you so much for the feedback. I really appreciate that. Next, we're going to hear from SC from Florida. And SC writes, I manage my own money and I am not a professional, which could lead to a disastrous outcome as it has for many. Simple Market Signals is the equivalent of having a personal money manager that keeps you invested when it counts and alert you to the potential dangers ahead. Now, I want to point out here, guys, I used to be a money manager. I sold my practice in 2016. So these are the exact words that SC from Florida wrote to me. So I just printed it as is. But I want you to understand, I cannot give advice, but this is the feedback that SC from Florida gave me. So I appreciate this. So again, SC writes that Simple Market Signals helps you stay invested when it counts and alerts you to the potential dangers ahead. The service is extremely affordable and takes the uncertainty and fear out of being in control of your own investments. I have done very well using this system and consider myself lucky that Rodney's YouTube channel came into view one day. I highly recommend this to anyone who desires an easy system to produce positive returns in the markets. Again, that's from SC from Florida, sent from his iPad. And guys, I want to point out the reason I'm using just the first and last initials is for the security of my subscribers, okay? I have hedge fund managers, very well-off, multi-millionaire clients. I have, people that are high up in various areas of the government. I have people from all walks of life. So just out of respect and security for my clients, this is the way that I'm presenting the information, just with their first and last initials as well as their state. Next, we're going to hear from FS from Massachusetts. Rodney is spot on in his reading of the markets. I was looking for a heads up to help me choose which side to use for vertical spreads. Again, that's from FS from Mass, and thank you so much, FS. I appreciate that. Next, we're going to hear from JV from New York. Now, I posed a few questions to my subscribers a few weeks ago, and this is the feedback exactly that JV from New York gave me with respect to the questions. So I produced it just as he wrote it. So the first question, what do you like best about Simple Market Signals? What JV said was, one of the things I like best about Simple Market Signals is that I have an easy-to-use tool at my disposal. I use the green, yellow, and red signals along with the general trend to help me determine how much equity risk exposure I want my investments to have in the market at any one time. I will either increase or decrease my equity exposure based on those metrics. The next question, what is important about Simple Market Signals to you? JV writes, I am a conservative investor. My main goal is to preserve as much capital as possible during market downturns, yellow and red signals, and to optimize my returns during green light conditions. The next question, how has Simple Market Signals helped you? JV writes, SMS helps me to determine whether to stay the course, increase equity exposure, or take defensive positions. For example, I will add additional funds to my equity investments during green conditions and move money to cash during red conditions. And the last question, how have you benefited from Simple Market Signals? JV writes, one of the benefits of SMS is that it has reduced the stress from always looking at and analyzing market conditions and worrying about it on a daily basis. And again, this is from JV from New York. JV, thank you so much for the feedback. I really appreciate that. Would you like the advantage of knowing when it's generally safest and most profitable to be in equities, and when it's most dangerous and generally least profitable to be in equities? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Want more charts? Want access to proprietary market information? Want to minimize the likelihood you will experience catastrophic losses in the market? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Again, that website is simplemarketsignals.com, and I will also leave a link to this site in the description box below this video.